Let's welcome on board Samir Arora from Helios Capital and chat about where is this market headed further from here. Samir, hi, good morning. Good to have you on the show.
Hello, hi.
Highest ever
Thank
10-day
you very
FI
much.
inflow, Samir, at over 28,000 crore rupees. What's aiding this optimism, Samir?
I don't know, but all I know is that every time they buy in such big numbers, the next month is very bad because it happened a few months ago also. But in general, I've also been confused as to what kind of money is coming in at this pace because it doesn't look like ETF money. Simply because if it was ETF money, it would be sort of distributed more widely. And if it was like $5-6 billion or say 4 billion out of this was ETF money, that would have meant a 600-700 million purchase in Reliance. And it doesn't look that Reliance has been bought with this money. So overall, I'm confused whether there's a large number of people who have simultaneously decided or it is a few, because there seems to be no concept of impact cost, and the same stocks keep going up. So if it was not with the to do with today's some new announcements that may happen from the FM, I would have said that in the short term, which we define only as right now, say 10, 15, 30 days, you need to take a pause.
Oops. So you're completely negating the possibility of a Santa Claus rally next month, are you?
No, I'm saying that generally everything has been. I mean, I'm very bullish. My net is very high, like nearly 80%. But I can just broadly see that you don't make stocks go up 30-40% without any news. There one can be that there is some news in a stock, sure it can go up 30-40%. But if there is no news, that just means some new money has come in which wants to invest, let's say 5 billion, some sovereign fund, some pension fund, who have a list of 30 names they want to buy, and they are not bothering about the fact that if you make a stock go up 20-30%, and what are you, that means you're playing for year three. And so I feel nervous about that. I might do a little bit reduction of my net, but obviously I also don't know beyond a point whether there'll be a Santa Claus rally, but I would think that you need some time to consolidate here. This is just too much, too fast. And also the assumptions behind it I don't believe in, which is the opening of the economy, because the vaccine we are not getting for at least 9 months in India. And even there, maybe by March, April, if at all it happens, that means you have 3 quarters of results for these companies which are not going to be driven by real opening.
I must update you, Samir, though. Just this morning, few minutes back, Dr. Reddy's actually confirmed to us Sputnik 5 has landed into the country and will be headed in for clinical trials very soon. So maybe sooner than later. But Samir, this morning, just about every brokerage is coming and upgrading their Nifty targets from 14,000 to 13,000 plus. In the longer term, I mean, in the near term, yes, sure enough, you've got to be a little cautious because the move has been really fast and just one-way move up. But do you think now we're in that blue sky zone? 13,000, 14,000 seems like a given?
Not a given, but a high possibility. And that I agree. Broadly speaking, over the year, it should be good. Reason being, of course, one is that if, in the March quarter and the June quarter, maybe your comparisons will look better with 1 year ago numbers. That by that time, even if India doesn't get the vaccine, but somebody has the vaccine, then people will be able to say, okay, now it's 6-9 months away. So I think that markets discount the future, but they don't discount 1 year ahead. They discount 5-6 months ahead, unless the stock has been sold on the basis that it is only to come up in 2 years or something. But broadly, the market as a whole cannot handle two bad quarters saying the fourth quarter will be good or something like that. That's what I feel. So that's why I feel that the short term and long term have to sort of smoothly flow from one to the other. But the other reason could be and would be interest rates, that the interest rates are low, and that itself drives a lot of not only corporate behavior but individual investor behavior. Plus, it anyway helps companies because most of them are leveraged. And then actually some reforms that India has done over time will start feeding in. So the top-down story is good. I'm just trying to figure out how to go from here to there.
Samir, what's also interesting is that, while we're rejoicing and looking forward to 13,000, 14,000 kind of levels, the churn is happening and the churn in sectors is consistent. We were just looking at how the markets panned out yesterday, for instance. Pharma made a comeback after a long hiatus. IT stocks, again, are still very much sitting on the sidelines. And the big mover, which was actually Reliance, which led you all the way from March up until October, is back to even, breaching those key levels of 2000.
So that is true, and that is why it is very difficult, and that is why we believe in our 30 stock story that you need to cover many angles because you really now know whose turn it is next. You may be able to find good companies, good sectors, good growth rates, but the market chooses. And because people in funds come and go at different times, you don't want to say, no, I have a 2 year story, so my returns will be there after 2 years. You want everybody to have a good experience, even if they choose to come for 1 year, maybe not on a monthly basis, but not only saying that this fund will only work if you stay 5 years or something. So broadly speaking, not only from that angle, but in reality, in terms of not being able to know whose turn it is next, you need to have these different stocks. And that is painful, but not so much for us because we cover the three main sectors that generally do well. And we have basically equal weightage in three, which is financials, consumer, and tech pharma, stroke specialty chemicals. Broadly speaking, 28-30% in each, and then 10-15% in other sectors.
Sure. Talking about pharma, Samir, this is a story that you track very closely. You've got Laurus Labs as well in your, fund. Are you using this dip/consolidation within pharma to add to the positions by any chance?
No, we are not adding because we have around 12% weightage, which is more than enough. If we have new money, then it would go proportionately into many stocks, mostly the ones we own once in a while in new stock. But generally, we are not adding because we are at generally a very high both gross and net exposure. That means our long side is quite high and our short side is whatever it is, so that the net is 80. There is not much room for moving that much around, but I have sold one bank stock yesterday, which was up like 45% this month. I think, as I said, there has to be a limit to everything being discovered or rediscovered in 1 month. So maybe once we pause the fact that I want to trim my net a little bit, then maybe after a week, 2 weeks, we'll see. Right now, in the middle of this mad rush for everything, although you're right, pharma has not gone up, so maybe there is some little room there. But generally, first, the whole market has to settle according to me. I think the market is carried away by the fact that India is opening up and all opening up trades are being bought. And that is very important for the big picture money to be drawn in. Then they may come and buy 20% pharma also in it. But first, we must make sure that this auto growth and these other things which are happening are really growing, and I don't believe that they
are. Okay. Well, okay, that's interesting, Samir, and I want to just delve into that a little bit more when you say that you don't really see that trend building. Is it something that you think is just going to take a little bit of time, or do you feel that they've actually slumped to such an extent and all the data points or the the kind of voices that are suggesting the recovery is well on its way are just not painting the correct picture?
Well, they're not painting the correct picture. They don't know the correct picture. We have seen in the last 25 years that the last guys who know anything are the corporates running those companies, not any particular one in general, because you get carried away with your own thing. So let's do big picture. So first big picture is that in the world, the auto sector has basically been disrupted. It is now only a matter of a going growth and fall, but in a declining market. Now people come and say, oh, but how can it be Indians will need cars and Indians don't have as many cars? It doesn't matter. Indians need coal. But because coal has effectively been disrupted there by ESG concerns and other concerns, nobody wants to look at what is the Coal India dividend or PE. And when people go to a theater or when people go to a movie hall or people go to a department store, you still see massive crowds. If you go to Macy's on Saturday morning, there'll still be a waiting list outside at 11 o'clock while people are trying to go in, but it has been disrupted. So the disruption in anything does not mean that, oh my God, tomorrow there will be no growth. All that means is A, the stock market guys will walk away, and B, the growth will be a little bit more difficult to get every year as the pool of people wanting to buy your product or see your product will go down and no business can handle that. So in the auto sector in the US, you can see that from many angles. You can see that from the market cap of Tesla versus the other. So whether it is because of EV versus the IC engine, or you can see that already there, driverless car facilities now available in one or two states, one or two cities only, and done by Waymo, which you can see on YouTube. And all these things will suddenly accelerate like everything else accelerates when it is logical and technologically feasible. After that, it doesn't matter whether in India somebody will not have the roads because it doesn't have to become driverless in India. If it get disrupted there, the stock market will disrupt it here. The other thing is that if you look at the pent-up demand, I have not been able to find any concept that if for 3 months, that is April, May, June, some X number of people didn't come to buy a car, how many percent of that have to come in to show that these numbers are there? What I mean is that for 3 months, let's say there was nobody, and each month the car sales were 100 per month. And then April, May, June. So April, May, June, there were 300 people who were supposed to buy a car and didn't buy. And then in the following months, also 100 people were supposed to come each month to buy. Now, what has happened to those 300 people? If only 20% of them come to buy a car, that means they should be buying 60 cars. And now totally you sold 120 cars, let's say. Now, why should it be that those people, only 20% have come, but new people are normal 100 people? Unless you clearly understand that there is a pent-up issue, which in 3 months, no combination of how many guys who were pent up and how many are walking in new, no number will justify this number. It is too low. And that is why if you see, even today, Rajiv Bajaj and the Maruti chairman and all these guys don't clearly admit and say that they can see beyond this festive demand and all this. So I also agree with that. And I don't think there is an auto recovery. But if it is good, we will enjoy it in other forms because that would show that my banks are doing well or my NBFCs are doing well. But I'm just telling you, same thing with the theaters. It doesn't matter that, oh, what will Indians do? Because if 100 people were watching movies on theater in 2019 December, if 5 of them don't see it in the long run, and then next year another 5, that is enough. 95 people going to the theater have no value because businesses cannot work and markets don't work if the backdrop is falling even by 5% per annum. So it is not enough to say, oh my God, I want to see it. You wanted to see it in December 19 also. But if only 5 people don't want to see it or 5% don't want to see it because they like OTT or they are scared, and then next year another 5 don't see, that's it. It's been disrupted. It is not a 0-1 situation that this market is trying to grapple with.
That's a very interesting point. I'll come to what new movies you've watched in a bit, but let's cover markets. Where else, Samir, do you think there's disruption which is likely to happen?
Please read this book because I don't think of these. I just read and connect. So if you want to read the original source, it is the future is faster than you think. And according to them, the auto, which I totally agree with that one, that the auto industry is gone already. It is totally disrupted and it is finished, except that it will drag on for a number of years. Because if this driverless car in the US comes, you see, they save not only that the car itself, instead of being used 5% of the time, is used 80, 70, 100% of the time, but you save on car parking space, which is very big in the US. Thirdly, because they're not drivers, but people are self-driving, they suddenly save 1.5 hours per day to read, to see movies, to do whatever. So that in US is sort of given. And if it is given there, who cares whether it happens in India or not or any other part? Because the investors don't go into a second market saying, oh my God, this business is dead in the first market, but let me still try and play it in the second market. So I would think today, and so the main point is disruption does not mean that next morning there will be zero demand. So has SMS been disrupted by WhatsApp or not? It has been. But even today we get so many SMSs. So to say, no, no, everybody will want to buy a car, this guy will want to buy, and this guy will want to see a movie, it doesn't matter. We are talking only a small number of people not doing it, and then another number, and then another number. And still that thing will go on. Like Macy's is still open if you want to go and do shopping. But the stock price may be down, I don't know, 80, 90%. So I don't know beyond that, but if every year and every month we read something new, some things will relate, I will be able to relate with and some not. So that is, I am not thinking sitting here what will happen 5 years later. I am reading, and if some things make sense to me and they are nearly current, it's not some big picture that will happen in the future. Please go on YouTube and search for Waymo, and you can see. So now it may not be Waymo in the end. Tesla might do it, some other guys might do it, but it is happening.
Sure. Samir, what will happen in banks? Because, while we're talking about this big sectoral churn which is playing out in favor of banks, within banks also there is a sectoral churn.
Yeah.
I mean, up until a month back, there was only one HDFC bank which was actually outperforming the Nifty bank returns itself. Since ICICI Bank came out with a blowout set of numbers, that started moving. IndusInd Bank then played catch up. Since yesterday, you've got ICICI Bank, IndusInd Bank sitting on the sidelines. They are not really participating. And now you've got the big one from the PSB universe, SBI, participating in the rally, and just about everyone's upgrading key. Now SBI is the next thing to bet on. How do you now play this musical chairs, if I can call it that, within banks?
So we have SBI also, and we have, of course, ICICI. So there the story is that you are getting subsidies, and if you do SOTP, both of them look very, very cheap. And generally, although we say we don't buy PSUs, we have had this one for the last 5-6 months or 4-5 months, basically because it has become too cheap. So in India, the banks are an easy thing to buy because some of these banks, these private sector banks and maybe SBI, have had clearly good management, and the opportunity for them has been there, and their disruption doesn't seem to be that big. But even there, as you can see, the number of stocks have fallen from previously owning another 4 or 5 private sector banks to every day, some bank getting reduced. So now there are maybe effectively 4 or 5 banks which you want to buy if you want to be safe. And then you can punt on some which become very cheap, and then hope that if there is a beta recovery, that means everything is doing well, then those banks which had which are guaranteed to not go out of business will also do well. But the shrinkage in the number of names in even private sector banks has been quite significant in the potential candidates which anybody should buy or could buy.
What did you make of Infosys analyst meet takeaways? The fact that, they're back on a sustainable growth track, margin comfort, of course, is very high, cash generation, allocation is now really the focus area. But IT is a discovered story, and this is not just Q2, Q1 as well. We all know the potential of a TCS and an Infosys and what have you in the longer run. Anything, Samir, that you feel that could challenge the growth story within IT?
No, so the thing is, I don't believe in this idea that the story is known, because we the analyst meet was good, but it was playing the same thing. We own the stock. It was only the same thing, that the trends that have started pre-COVID are accentuating, whether it's going to cloud or going online for companies or whatever. But I'm saying in a big picture sense, HDFC Bank reached its foreign ownership limit in 2013 at 74%. So how much more should a stock be known than that it is already at the maximum ownership by foreign investors? But still the stock has continued to do well. Last night, we have in our global fund Amazon as a top holding at some 8%, and we bought some more Amazon. Now, what did we discover? It is known. So the point is, if the opportunity is big, and the management is good, and generally they're able to handle the environment, the story can go on even though everybody knows about the story. So I think the same is the case with Indian tech. You may say that it's not a new story, but it will still deliver market-beating returns over time because for Indian investors, there are very few ways of directly playing the big macro trends happening in the US because that is where the technology is, and we don't have that many companies in tech listed here, so can call it poor man's tech. But they have all done a great job, and they've all been great companies, and their numbers and ROC and everything might be better than half or 90% of the US tech companies, which everybody's enamored with. And therefore, doesn't matter that it is known. This is a good thing India has this sector, and yeah, we should be there for till something goes wrong. It is perfectly fine right now.
What about Reliance, Samir? Does it seem like all the good news for now is baked in, and now will we have to wait for something on the Aramco deal for the stock to push way higher?
Well, we have it in the top positions, but the thing is, we don't know, and we are not supposed to talk too much about individual stocks. But the big picture is that if so many investors have come in who are financial investors, not only people, like when the strategic guys come in, they can say that they want to tell their shareholders that we are in India and we are in the 1.3 billion people market, and therefore there is a lot of hope and prospects. But when the financial investors, who are basically these PE funds, come in, they are interested and they have a very high hurdle rate because when you're buying a private company, your hurdle rate has to be higher than if you're buying a listed company and then you're locking your money for 4 or 5 years relative to a listed company investor. Therefore, if so many guys have felt it appropriate to invest in the two businesses, we not being privy to the exact plan on how it will happen and what is the next game plan, but we can ride on that for the last 5-10% of our analysis, saying that we can see most of the thing and how they can develop, but there must be something more. Or if there is something more, then these guys are, in a sense, putting their thing. If it was one fund, I may have said I don't like that fund because that guy looks dumb to me. But these guys are all quite big and they are coming from across different backgrounds. So we go along with their due diligence for the last 10% of our own due diligence. That is how due diligence is done. You rely also on what the other people are saying, doing. When management is buying back stock, when people are exercising options, we look at all that, right? So this is in the same way. We cannot say that we will not care what everybody is doing. For example, some brokers are basically saying we don't care. Well, the 20 guys have bought some $30 billion of stock. What do you mean by saying I don't care?
Yeah, absolutely. Okay, let's leave all this, Samir. What's the Diwali plan? Card parties, sitting at home just reading? Anything
No,
fun lined up?
no, not much fun lined up, basically, because here the rules are that you can have only 5 people at a time at home or going out 5 people at a time. And anyway, it's okay generally to keep a low profile sometimes. I'm high profile enough otherwise in terms of being everywhere. So sitting at home is a good this thing.